Let's quickly move on and focus on some more stocks. Now, we spoke about the BharatNet, beneficiaries. That's one part of the market to watch out for. The other is going to be MCX and Paytm. Let's revisit why these stocks are important to look at today. Vamakshi is here with a recap. Vamakshi.
Well, Surbi, first up is MCX. The stock will be in focus today because keep in mind that NSE has now received SEBI's approval to launch monthly electricity futures contract, and in turn, it has become the second exchange to get a nod after MCX got the nod earlier this week. Keep in mind that SEBI had already granted an in-principle approval to NSE about a month ago, which the company then confirmed in a Q4 con call. And they also added in the same con call that the NSE has an advantage in this market due to its advanced technology as compared to some of its other players. Now, the approval for NSE was expected to come through, but overall, this is a sentiment negative for a company like MCX because of the kind of competition that could come through from NSE. So, therefore, the stock could react negatively to this news flow today. The next counter we're watching out for is Paytm. Keep in mind that the Finance Ministry has gone ahead and clarified that there is no plan to levy MDR charge on UPI transactions. Keep in mind that MDR is the merchant discount fees. It is actually the fee that is charged to merchants for accepting digital payments. Usually, it is a percentage of the transaction amount. Currently, there is no MDR that is applied to UPI as well as RuPay debit card transactions, but the reintroduction could have been positive for Paytm, allowing it to monetize its payment gateway services more effectively. This, however, is not coming through, so therefore it's a negative for Paytm. UBS, in fact, has a neutral rating on this counter, target price of 1,000. They too say that this is sentiment negative for Paytm. They're building in 1 basis point contribution to Paytm's net payment margin from either introduction of MDR or increased incentive as compared to the budget. But in the absence of both, they see a downside risk of almost 10% to the adjusted EBITDA for FY26 and 27. So therefore, Paytm too could see a fall in today's trading session.
It is down. It's actually 5% lower, Paytm. Yeah, absolutely. Got that, Vamakshi. Thanks very much for that.